So let's talk about Warren Buffett. He's probably the most famous investor on the entire planet. And right now, he's doing something that has the whole financial world asking one giant question: what is he waiting for?
It all starts with this number. We're talking about more than $300 billion. Just let that sink in for a second. It's an absolutely staggering amount of cash. But it's not just the size of the number that's so important here. It's the context.
See, this isn't normal, not even for Berkshire Hathaway. If you look back over the last 25 years, their cash usually hovered around 13% of their assets. But today, it's sitting at 27%. That's more than double the average. So yeah, this is not business as usual.
And that brings us right to the heart of the puzzle we're going to unpack. Why? Why would a guy who's famous for buying incredible businesses suddenly choose to just sit on a record-breaking pile of cash? Is he nervous? Is he planning something huge? Let's dig into the theories.
Okay, so theory number one is a pretty popular one. It was even brought up by a shareholder. The idea is that this is all for the next guy in line. That Buffett is basically building up this massive war chest for his successor, Greg Abel, so he can go out and make his own big splash. The thinking goes, maybe Buffett's holding back on purpose. He's giving the next leader this clean slate, all this flexibility, so he can make his own moves without being constantly compared to Buffett. It sounds pretty noble, right? Maybe even logical. But according to the man himself, it's completely wrong.
Yeah, in his classic witty style, Buffett just shuts that whole idea down. He jokes that he wouldn't do something so nice as to make his successor look good. So the takeaway here is crucial. This is not about passing the torch. No, the real reason is way more fundamental to how he and Berkshire see the world.
The real reason this cash is piling up, it's not about succession. It's not about trying to time the market. It's all about a deeply held investment philosophy, one that he shared with his incredible late partner, Charlie Munger. And it's a philosophy that, honestly, runs completely against what most of Wall Street does. You see, it all boils down to this. Conventional wisdom, what you hear everywhere, is that you should always be fully invested. The idea is that cash is trash, your money should always be out there working for you. But Buffett has said, we have made a lot of money by not wanting to be fully invested at all times. They don't want good, they're waiting for the truly extraordinary. And this quote is just brilliant because it shows you the massive influence of Charlie Munger. Munger believed in what you might call extreme focus. He thought, forget 50 good ideas, just find 5 fantastic ones in your entire lifetime and you'll do better. I mean, that's a mindset that requires an unbelievable amount of patience and discipline. It's the very soul of Berkshire's success. This whole approach actually has a name. It's called opportunistic investing. And it's not about investing on a regular schedule or hitting some kind of quarterly goal. It's all about recognizing that the truly great opportunities are rare. They don't just pop up every day, and you have to be absolutely ready when they do. So, what does that look like in the real world? Well, Buffett famously uses a baseball analogy to explain it. He says, in investing, you don't have to swing at every pitch. You can just stand there at the plate and wait for the perfect one, the one that's right in your sweet spot. The market can throw all kinds of stuff at you, but you only need to connect with a few of those perfect pitches to win the game. And this is the key insight right here. The stock market isn't some factory that turns out a predictable number of good deals every single day. Things just don't happen in an orderly fashion, as Buffett would say. It's messy, it's unpredictable, and every once in a while it just serves up an absolute gift. Buffett calls this whole process a treasure hunt. And it's not passive waiting, it's super active. It's about sifting through countless companies and ideas, looking for something that actually makes sense to you, and making sure it offers really good value. And then comes the final step, which is also the hardest. You wait for that incredibly rare moment when it's actually for sale at the right price. That's what the cash is for. So we really shouldn't be looking at this mountain of cash as a sign of fear. That's not it at all. We should see it as potential energy. It is the ultimate tool for an opportunist. It's the dry powder that lets Berkshire move with incredible speed and force when everyone else is panicking. Look, Buffett is the first one to tell you he has absolutely no idea what the market's going to do tomorrow, or next week, or next month. And he really has no time for anyone who claims they do. Trying to predict the short-term stuff is a fool's errand. The real focus is on being prepared for whatever comes your way. And this quote right here, it says everything. You can just feel the confidence. For him, it is not a question of if a great opportunity will show up, but when. He knows from decades of doing this that eventually the phone is going to ring, and on the other end will be an offer they've been waiting for. And when it does,
they'll be ready.
All right, so let's just quickly recap the whole thing. That $300 billion, it's not a going-away present for Greg Abel. It is the physical result of a disciplined, patient, opportunistic strategy. It represents waiting for something truly extraordinary. It's the dry powder for a future fat pitch that maybe only Berkshire will be in a position to swing at.
And that leaves us with one final thought to chew on. In a world that is obsessed with constant action, with always doing something, maybe the most powerful and most profitable skill an investor can learn is the discipline to patiently and happily do nothing at all.